one of the things that you may have noticed when you are researching for this cash management account, you may have seen a lot of videos on, hey, people are leaving their banks for Fidelity. I personally have seen plenty of those videos, but why is that the case, and is that the right move? Now, people are ditching big name banks like Bank of America, Wells Fargo, even some online organizations for better interest rates, better yields, but many are just jumping into the account without knowing fully what they're actually getting into. Now, choosing based on hype only can lead to costly mistakes, and many people overlook how an account fits into their actual money systems, because it's not just about the interest, it's also about the clarity, control, and of course, the convenience. So before you open the account, make sure that you understand how it works for your goals. We're going to get into that here in today's video. Now, if you don't know anything about me, by the way, welcome. My name is Alex Isidro, and my channel here is all about helping professionals and families increase their income, optimize their wealth, and achieve financial security. So if you find this video helpful, please give it a like, subscribe to the channel, and check the links in the description for helpful resources to grow your wealth, and also for financial clarity sessions where I can help you turn your scatterness, overwhelm, frustration, and uncertainty with your money into confidence, clarity, and establish a clear financial path for you so you can stop wondering whether or not you're making the right moves. All right, so with that being said, the first clarification that we got to make with Fidelity is the fact that Fidelity is not a bank. Fidelity is a broker, and as a broker, it blends checking account features with investment capabilities that a lot of banks simply can't offer. For example, I used to have an account with a local bank, and I didn't have, number one, high interest at all, but also with my checking account, I didn't have investment features. Now, you might be wondering, why do I need that? Like, what kind of problem does it solve? Now, one thing to keep in mind here is if you recall a couple of weeks ago, there was a lot of uncertainty with the market was going down, and there was a lot of people's 401ks tanked, unfortunately. But one of the things that happens whenever there is uncertainty and fear in the market, whenever there's a crisis, there's also opportunity. And a lot of investors were using the cash they had available to buy the dip, to buy stocks on sale, index funds, etc. Now, here is when this account comes handy. I saw a guy who was trying to make and capitalize on the fact that the stock market was going down, but he couldn't because he didn't have the money available. He was transferring from his main bank into his brokerage account, and he just didn't make it because right before the money got into his brokerage account so he could buy, the market had already recovered or was recovering, and he missed on a great opportunity. So if you are somebody that has a lot of money and disposable income, and you want to buy the dip and you want to use that money to invest in your future, then this account can be very, very handy. So in addition to those investing features, as I mentioned, it comes with a routing number, debit card, bill pay, check writing features. It seamlessly connects with the Fidelity IRA and your Roth, of course. And also it reimburses you fees and no account minimums. It also gives you a free wire transfer. So here is all the details and features that Fidelity gives you. So essentially, the way I see it, these are all the banking features that personally I would need. Now, here's Fidelity's secret weapon, and that is the SPAXX advantage. What does that mean exactly? Now, the SPAXX is a security where Fidelity, as opposed to just keeping your money idle, they put it in a government-backed money market fund as one of the options. Now, as you'll see here in a second, I'm actually going to go forward here for a second. There are two options when it comes to choosing or opening your cash management account. You can put it in a money market government fund, or you can put it in an FDIC-insured deposit sweep program. Now, the main difference that I've identified with this is with the FDIC-insured deposit sweep program, you are insured up to $5 million, and essentially there's zero risk as long as you are within the FDIC insurance threshold. Now, with the other one right here, with the money market fund, there is a little bit of risk with your money losing value, but because it is backed by government securities, then the risk is not high, and there's still a little bit of risk. And I think that's why they give you a higher interest rate, because hey, higher risk, higher return, baby. All right, so I'm going to go back here for a second. Currently, the higher interest rate, the SPAXX, is offering about 3.9% as of this video. And as I mentioned, there's also an FDIC insured sweep option. And definitely this SPAXX or SPAXX outperforms a lot of high yield savings accounts out there that I've identified, because a lot of high yield savings accounts are around like 3.6, 3.7, some of them are 3.8, like American Express, Capital One, SoFi, Marcus. So this money market fund right there already outperforms those types of high yield savings accounts. Of course, it's not the highest one out there, but it's still pretty convenient, and it's a lot more than what a regular bank out there would offer you. So here's the downsides that you won't see in the promo page, right? We have the hidden friction points that can frustrate a lot of Fidelity, even the loyal users. So without direct deposit, transfers can take 5 to 10 business days or even longer. In the video that I made previously about Fidelity, when I was doing research, I got some feedback from current customers who quit Fidelity because their transfers were just too long. So some people complain and they say that the transfers can take 10 business days, for some people even 20 days. So that's a long time, right? So it may not be ideal for emergencies because the access is not as instant as a traditional bank. You got to make sure that you plan this ahead. And also another downside is the fact that the interest rate is not fixed. So what happens here with money market accounts and high yield savings accounts, any type of savings account, the interest rates depend on what the Federal Reserve is doing. So if the Federal Reserve is increasing interest rates, then they give you a higher interest on your savings. If the interest rates start going down, then they give you a lower return on your savings. Of course, on the flip side, a little bit unrelated, mortgages and car loans, etc., they also go down in interest. But of course, that's a subject for another video. At the end of the day, the Fidelity Cash Management Account, the way I see it, works well if you understand how it can work in an ecosystem and set it up intentionally. All right, so here's how many people misuse this type of account. They open it just because of the interest. They don't build a smart system around it. And essentially, if you don't use Fidelity as a financial hub, then it may not be used to its full potential because it's not a savings account. If you want to use it only as a savings account, then there are other options out there that you can use only as a savings account with an even higher interest rate. So remember, high checking features, high yield interest, checking features, and ability to buy, then buy in the market and stock market. And hey, those are the biggest benefits I personally see. So putting that all together, of course, here we have on the left side, as you can see, the pros of this Fidelity Cash Management Account. We have the high APY, of course, the brand and the credibility. I actually do have one of my retirement accounts with this organization. It's also got the high yield checking account with investing features. As I mentioned, it's kind of hard to beat. No fees whatsoever, ATM reimbursement, and it does have SIPC insurance, SIPC insurance, which is essentially kind of like an FDIC insurance. And the difference is that FDIC insurance is for banks and SIPC insurance is for brokers. Now, when it comes to the cons, of course, it is fully online. The transfer times can be a little lengthy. As I mentioned, the interest is good, but it's not the highest one out there in case you are trying to open an account with a high yield interest. So is it for you? That's the question of $1 million. Would I recommend it to my mom? I want to say yes, if you value zero fee security, of course, and investment access, Fidelity is a great option. It's also great for those people who want easy access to their cash in order to invest. Also, travelers who want fee-free ATM withdrawals worldwide. An idea also for many high net worth individuals who need FDIC protection up to $5 million. If you put your money in the FDIC sweep program, which does have a lower interest rate, it does give you protection up to $5 million. So you might be wondering, how do they do that? They do that essentially by partnering with a bunch of FDIC insured banks and they distribute your money. And that way they're able to give you a high FDIC insurance. However, it's not the best for you if you want an even higher interest on your savings, if you want physical branches, and if you want instant cash / liquidity beyond what an ATM may offer. One thing that comes to mind is when you go to an ATM, not only are you constrained by the amount of money that you can withdraw in one session from an ATM, but also there are daily limits. Some companies put one transaction at $500, and sometimes other banks, they give you a daily allowable limit, maybe 5 or 6 withdrawals per day, up to $2,000 or $3,000. This is going to depend on the bank. This is something that I learned when I was working in a bank myself. So this is all going to depend on the organization itself. So if you're somebody that wants to take out 5-6 grand and you are beyond the ATM limit and it's a weekend where wire transfers are not processed, then you're just going to have to wait. So if you're interested in accounts that offer even higher yield, check out high yield savings accounts. I'm actually going to share a few top links and recommendations in the description. And if you enjoyed this video, give it a like, subscribe to the channel, and share it with a friend. I'll see you guys on the next one. Peace.